David, of course, the dollar has weakened following those worse than expected jobs data on Friday. I would have expected it to go the other way, though, as risk aversion rose. Why have we seen this dollar reaction?
Excuse me. Well, the initial reaction was for a stronger dollar, as a safe haven status on the back of the weaker non-farm payrolls. But then the market shifting their focus just to pure fundamentals in terms of the US's economic state and the jobless recovery, essentially what everybody's calling a jobless recovery, and focus shifting to the viability of the dollar as a medium-term investment destination. And of course, subsequent to that, we've seen the dollar depreciate, and that brought some strength into the rand. And notwithstanding also that we saw a massively bullish gold price on Friday, rising from sub $990 to over $1,000 per ounce, all fed through into a very good performance for the rand on Friday afternoon.
And just at the current level, 764, do you think the rand has now priced in the impact of not having the MTN Barty deal? And also, how volatile would you expect it to remain for the rest of the week as we get that local economic data through?
Stephen, I think the MTN Barty sort of price action is now out the market. The initial shock has seen the rand weaken dramatically, and I think now we're back to focusing on international events. It's all eyes again on equity markets, what the dollar is going to do, and of course what gold is going to do.
Where would you expect the dollar to go from here at this stage? I mean, we saw some weakness coming through against the euro. And a few weeks ago, we were talking about the dollar being on a weakening trend, but of course, since then it has strengthened slightly.
Well, the market is on a weakening dollar bias, and the fact that the G7 didn't highlight any concerns. We've had some comments out of Europe that they're not too concerned about the strength of the euro at the moment. So I wouldn't be surprised if we see the euro strengthening more this week, perhaps tracking up towards 147, 148. That will have implications for the rand, and I think the rand is in a new range, 750, 775. And we'll have to just watch all those markets very closely to try and get some gauges to investor appetite.
We're getting gold and Forex reserves numbers out this week. We did have the Reserve Bank governor last week confirming that the bank had been in the market creaming off dollars. I mean, do you think that the extent of that could push the rand even weaker once we see it?
I don't think so. I would be surprised if the Reserve Bank bought massive volumes of dollars. The governor's statement was quite interesting, that they've creamed off rather than intervention, which suggests that they were active in the market, very definitely so, but I don't think very aggressively, and I don't think they're particularly targeting any level. Historically, the reserves haven't really garnered much attention in terms of direction of currency movements, and I guess it will be of some interest to see exactly how much they accumulated during this period. But I think the effects of what that number would wear off pretty quickly as international events take center stage again.
And of course, we do know that those gold and Forex numbers are also likely to include another tranche from the IMF SDR drawdowns, as well as perhaps the proceeds, the last of the proceeds from the euro bond that was raised a couple of months ago.
Well, that's the point. There are many things that affect the status of the reserves or the state of the reserves. It's not simply a purely a foreign exchange purchasing or sales. There's many things that feed into those reserve numbers. So difficult to read into it, and it will be of secondary interest, I think, once the market absorbs all those other factors.
Of course, we have the IMF and the World Bank holding their annual meetings in Istanbul and Turkey this week. I mean, do you think anything could come out of that could impact the currency market dramatically?
Well, I think the whole sort of game plan at this stage is to reassure the markets that the recovery is underway, albeit slower than what was initially expected. Nobody wanting to create any sort of panic and bearish sentiment as far as equity markets are concerned. So I think the general sort of state of play is just to continue talking up the global economy, but also at the same time suggesting that there are still a number of hurdles to climb, not least of which is the employment or the unemployment problem, and that rhetoric, I think, would continue. As long as we continue to see relatively good economic data or less bad economic data, I think that will satisfy the monetary authorities globally, and they're just trying to keep confidence in the system relatively robust.
Of course, as you said, over the past week, the rand has moved out of that very tight range. It was trading around the 740 mark, now around 750 to 770. Where would you expect the rand to go from here?
I am expecting further dollar weakness to feed through, and hence some gold price strength, and that should feed through into some rand strength. Not dramatic, because there are also some internal factors coming into play. We've had news or speculation, be it about the state of the macroeconomic plan and who exactly owns that. And the market will be watching those dynamics with some interest to see exactly how much power COSATU is getting as a sort of payback for their support in the last national elections. So that for me is on the back burner. We need to keep an eye on that, but I wouldn't be surprised to see some dollar weakness feeding through in the next few sessions.